There has been some incredibly bullish proclamations from investors, institutional investors, hedge fund managers, media talking heads on the future of GM. In fact, a number of them believe that not only will General Motors outsell Tesla in 2025, they also believe that GM will double the number of EVs that Tesla sell in 2029. Many of them, in fact, it seems the consensus in the media in the United States that it's only a matter of time before General Motors does in fact overtake Tesla. Is this realistic? Is this possible? Well, I'm going to share with you an investment thesis which is a bit contrary to my personal belief. We'll go over some facts and see whether or not it is possible or realistic. Let's play the devil's advocate. Let's find out whether or not I'm wrong. And GM, in fact, will double the size of Tesla. Hello, my friends, and welcome to the channel. I'm the Electric Viking. Great to see you. Welcome to all the new subscribers. Welcome back, everyone else. For starters, let's have a look at the current facts. The current facts are, well, the fourth quarter of 2021, General Motors built 27 electric cars. That's not models. They said that they would have 20 models by the end of October to sell, 20 models by the end of October this year. Yeah, well, that's not going to happen, obviously, is it? But they sold 27 models. Of course, we know what happened there, why that happened. GM says it's all comes down to one reason. It's all LG Chem's fault. LG Chem supplied them with dodgy batteries, so they had to stop production of the Bolt and the Bolt EUV. Sounds a bit like Ford, doesn't it? Remember when Ford barely sold any Mustang Mach-E's in China and they blamed BYD? Yeah. I don't buy those sort of things. I don't buy it when you blame one supplier. If you decide to hinge your business on one supplier and then you blame them for not delivering, that's your excuse. Well, you know what the Queen says about that? The Queen of England? She says, never complain and never explain. I love that. I love that message. Never complain and never explain. If you need to try and explain your poor performance and blame it on someone else, then really, who is really responsible? Well, the thing is, GM have ramped up EV production since then. However, the second quarter of this year, GM still only delivered just over 7,000 EVs in North America. Still a long way off the million EVs that they say they'll deliver in 2025. Now, people are saying you should be investing your money in General Motors. In fact, it appears as though it's now popular in the investment world to bag Tesla, to say you're crazy. I'm talking mentally crazy. If you invest in Tesla, that seems to be the consensus. And that you should be investing your money right now, taking it out of Tesla if you have any brains in your head, and putting it into GM stock. A full-time analyst working for Seeking Alpha says that GM is proven to be highly aggressive in its EV expansion, given the multiple critical announcements in supplier agreements and rapid ramp up in battery production. He claims that the second half of 2022, GM's delivery will be boosted by the redirection of excess production capacity to automotive chips as the demand for personal device chips declines. With the reinstatement of quarterly dividends, favorable Inflation Reduction Act, and $5 billion of share buybacks, GM is an outright steal in the mid $30 where it's at right now. Investors should back up the truck during the next potential dip near the 20th of September 2022 as the Fed announce their next interest hike. In other words, you should be buying stock right now. If you don't, you're crazy. Now, the same author said you're crazy if you buy Tesla stock and you must buy GM. He goes on to say, here's the investment thesis. General Motors has proved why it is one of the leading automotive producers globally, given the advanced material supply agreements, impressive projected output of 160 gigawatts from Ultium battery plants, and exemplary capital raises and loans thus far. With the accelerated EV investments, we are highly confident about GM's 1 million projected capacity by 2025, if not earlier, assuming the eventual recovery of macroeconomics and the global supply chain by 2024. So this investor, who is giving investment advice, says that not only will General Motors hit 1 million EV deliveries in 2025, which is an increase of about 17,000% versus where they're at now, but there's a good chance they'll hit that number in 2024. Interesting. He goes on, along with an aggressive projected year-on-year growth in wholesale by 30% and 90 billion annual EV revenue by 2030, GM is absolutely ready to go indeed. As a cherry on the top, 75% of its commodities will also be sourced from North America due to the significant geopolitical implications from Russia and China. The temporarily elevated sticker price for new and used auto sales would also improve GM's margin ahead, given the limited market supply over the next few quarters, thereby speculatively balancing the $5 billion impact of rising inflation for full year 2022 and aggressive investments into the EV segment through 2025. In FQ2 of 2022, GM reported revenues of $35.76 billion and gross margins of 12.5%, representing an increase of 4.6%, though a decrease of minus 2.3 percentage points year-on-year, respectively, partly attributed to rising inflation. Also reported further headwinds to its profitability, with net incomes of $1.69 billion and net income margins of 4.7%, indicating a decline of 40.4% to minus 3.6 percentage points year-on-year, respectively. However, it is essential to note that these declines are mostly attributed to the 95,000 vehicles worth approximately $5.7 billion produced in North America being undelivered due to missing components, thereby pushing the unrecognized revenue, net income, and free cash flow generation to the second half of 2022. In other words, he's saying that GM's revenues did not decline for the first half of 2022. All that's happened is they've got a bunch of cars in parking lots just waiting for a couple of parts, and when those parts come along, well, those revenues will be boosted, and actually GM's profits will be pretty similar to last year. Is that true? Nobody really knows if that's true or not. Purely speculation, I think it's fair to say. This global event has directly affected GM's cash flow generation, with an SCF of $1.66 billion and an FCF margin of 4.65% in the first quarter of 2022, representing a decline of 72.5% and 13% respectively. The elevated $2.1 billion of capital expenditure in the latest quarter has also partly contributed to its lower cash flow compared to $1.5 billion in the first quarter of 2021. As a result, it is not surprising to see an impact on its cash and equivalents of $19.72 billion on its balance sheet in the latest quarter compared to $27.37 billion in FQ2 2021. However, we must also highlight that the sum remains robust for most of its EV expansion and growth plans worth $35 billion through 2025, given its robust projections for the rest of this year. Now, in the meantime, the company's long-term debts of $16.1 billion and interest expenses of $0.23 billion in the latest quarter remain relatively stable, significantly aided by the new $1 billion notes due in 2029, $1.25 billion notes due in 2032, and $2 billion loan from the US Department of Energy. Now, I want to point out a little fact here that he conveniently ignores. GM is paying more interest for those loans than Tesla did in 2017 for its highly speculative loans when it was on the verge of bankruptcy. GM's interest rate on those loans is around 5.4%, and they're considered BB, which is speculative with a high level of risk attached to them. That's ratings that have come from Fitch. So I'm not convinced that the market is seeing GM as a safe bet if loaning money to GM is considered highly speculative. Now, Seeking Alpha go on to say that barring any additional leveraging, these capital raises would bring GM's debt levels to $21 billion in the third quarter of 2022, further strengthening its balance sheet in a period of economic uncertainties ahead. This is what Mary Barra had to say. While demand remains strong, there are growing concerns about the economy, to be sure. That's why we are already taking proactive steps to manage costs and cash flows, including reducing some discretionary spending and limiting hiring to critical needs and positions that support growth. We have a foundation of strong earnings and cash flow, and investment-grade credit rating, historically low pension obligation, and outstanding vehicles, servicing and pricing. All of this will help us continue to execute our growth strategy and insulate us from short-term market challenges. Now, Mary Barra obviously famously has said that GM will in fact surpass Tesla in 2025. And it's worth pointing out, if we're talking about credit here, the percentage in interest that GM is currently paying for the loans they've just been able to source recently within the last couple of months is a lot higher than Tesla. In fact, 5 times higher. That's a pretty big difference. In conclusion, Seeking Alpha says this: it is evident that GM is riding on the bullish sentiments post-Inflation Reduction Act, combined with the reinstatement of its quarterly dividends, $5 billion of share repurchase program, which I strongly disagree with. Why would you be spending $5 billion repurchasing shares when right now you need to build factories that will be building electric vehicles and new assembly plants? Now, in my opinion, is not the time for stock buybacks. I strongly disagree with that decision from General Motors. Now, Seeking Alpha says, that GM is strengthening its domestic battery supply chain with LG Chem, POSCO Chemical, and Livent Corporation, which is true. The latter would definitely aid the company's future sales, given the favorable $7,500 tax credit for its basic models of trucks, vans, and SUVs and cars. The recent semi-destruction of mid-tier smartphones and PCs may also pave the way for increased production and availability of automotive chips from GM's domestic partners such as Qualcomm and ON Semiconductor. That's highly speculative to make that comment though, thereby potentially boosting the company's delivery and top line growth. Assuming 1 billion production output by 2025, the EV segment would easily comprise an exemplary 15% of its global deliveries of 6.3 million as of full year 2021. Otherwise, a decent 10% based on GM's maximum output of 10 million in 2016. Nonetheless, due to Powell's hawkish commentary on aggressive interest rate hikes, consensus estimates have downgraded GM's stock price target from $53 in July 2022 to $45 at the time of writing, with the latter representing a minimal 18.1% upside from current prices. Combined with the fact that it is trading with a baked-in premium above its 50-day moving average of $35, we prefer to exercise caution for now. However, investors will be well advised to wait for the dip, adding in the mid-30s, when they should back up the truck and be buying as much GM stock as they possibly can. So, clearly, this thesis here doesn't address some of the elephants in the room. What are the elephants in the room? Some of those elephants are this. GM does not plan to use lithium iron phosphate batteries for any of its vehicles, period. That is a significant cost disadvantage to the company, and I believe it will hurt them. Why? Lithium iron phosphate batteries, in particular the newer batteries with higher battery energy densities, are approximately 30 to 40% cheaper than lithium ternary batteries. This is a significant challenge for GM to overcome, especially since it's manufacturing all of its batteries using only one battery partner. If there is some issues with that battery partner, with the batteries that they make, with the Ultium battery to be precise, GM has nowhere to go. There is literally nowhere to go. Companies like Ford have addressed this issue. Ford now are getting battery supplies from multiple suppliers, including lithium iron phosphate and lithium ternary batteries. Tesla, well, you all know what they do, 4680s, of course, they're getting them from themselves, 2170s, from Panasonic, and their Tesla joint venture, lithium iron phosphate batteries from CATL. Samsung also plan to produce 4680s. Of course, LG Chem also manufacture batteries for Tesla, and so do BYD. There's lots of battery suppliers for Tesla. GM, one. That, in my view, makes it dangerous for them. Because, why? LG Chem is the most recalled battery manufacturer on the face of the earth. They've lost more market share than any other battery company has in the last 10 years as a result of all the recalls. That, in my opinion, is a bit of a dangerous precipice to be on for GM. That said, I do like GM's vehicles. I like the GM battery. I like the products they're making. And I like their aggressiveness. I like the fact that they're ramping battery production in the United States. They will benefit from that because the new tax credits will help them to benefit from that. And that will mean government funding will go to GM instead of other companies. That, in my view, is actually a good thing. However, should you invest in GM? Well, it's worth pointing out, GM have a pretty bad track record of delivering what they say they will deliver. Does anyone think they promised they were going to deliver, 28,000 EVs in 2022 total? No, they did not. What about the 20 electric vehicle models they promised by October of this year? They'll deliver on maybe 3 of those. The reality is, GM has a bad track record of delivering when it comes to EVs. Will that change in the future? Probably. I think it probably will. Can we bet on it? Is it worth betting your life savings that GM is going to suddenly change its stripes and become a different cat and start delivering on EVs in the millions within a short period of time? No. This is the kind of talk that mad people say. This is the kind of talk that comes from people who are committed, hardcore brand fans who love a certain brand and want you to love that brand too. Now, actually, I do kind of like General Motors a lot, the brand. I love their pickup trucks. I don't know why. They appeal to me. So there is that emotional content for me there. But when I talk to you guys, I don't want to brainwash you. I don't want to get that in the way. I don't want to have that my feelings towards GM as a brand. I absolutely love the Camaro. If I could have any muscle car, I'd get a Camaro. I love the Camaro. But honestly, Those feelings should not come in the way of the reality. The reality is GM has to transition from being an internal combustion engine vehicle producer to being an electric vehicle producer within 8 years. It's got 8 years to do that. If it does not do that successfully, which it may or may not, no one really knows, it will go bankrupt or have to be bailed out by the US government. That is a very real possibility. What else is possible? It's possible General Motors cannot make a profit from selling all these EVs, which they plan to bring to market. We don't know. They don't even know. GM don't know because why? Because once GM has actually started to ramp up production of its batteries, what will be the cost of supplying all those metals? The cost of supplying lithium, the cost of supplying nickel and cobalt, the cost of supplying aluminium, what they need for these batteries. The cost of these batteries is going up pretty significantly, pretty quickly. GM is promising things they may not be able to deliver. For example, Ford delivered a $40,000 F-150 electric pickup truck, which is brilliant. However, we all knew that wouldn't last. They increased the price about 2 months after delivering it, and they only delivered a small number at that price. Why? Because it's a loss leader. All these cars, GM says they're going to deliver the $30,000 mythical SUV, electric SUV. Yes, it sounds brilliant, but can they make a profit from that vehicle? I don't think so. Tesla, could they do it? Can they make a profit from selling a Model Y at $30,000? No. They can't. So why is it that we believe GM when they say that they can? I don't think that's believable. I don't think that's realistic. And I think if you want to invest in GM, you need to hold off. Hold off for another 6 months, reassess in 6 months, come back here. I'll reassess the company in 6 months' time. We'll see if they really are heading towards where Mary Barra says they will be, which is producing 1 million EVs in North America alone in 2025. Now, I, for one, hope that that happens. But right now, there's absolutely no way of knowing whether or not they'll deliver on their promises. Thank you for watching. Bye-bye.